네, 이번 시간에는 이데일리에서 단독으로 월가의 베테랑 투자자인 야데니리서치의 야데니 대표님을 모셔봤습니다. 현재 미국 주식시장이 광란의 20년대다라고 표현을 하면서 호황기를 계속해서 이어갈 것임을 강조하고 있으신데요. 어떤 인사이트들이 있는지 직접 모시고 이야기 들어보도록 하겠습니다. So, Dr. Yadeni, thank you so much for joining us today. Could you please start by giving a quick greeting to our Korean viewers?
Yes, well, thank you very much for this opportunity to join you and your audience. I think we're going to have an interesting conversation discussing the outlook for the U.S. and global financial markets and economy.
Thank you so much. It's a real pleasure to have you here with us today. So let's dive right into our questions. Recently, Korea has faced some political uncertainty and the stock market has been very volatile. From a global perspective, what do you think are the biggest risks for the Korean market right now? And how do you see the futures of Korea's economy and stocks?
Well, look, I think we have to put everything in a global context these days. And South Korea is not the only country that's having political turmoil. We've seen that happening in Germany and France and Canada. So it seems to be a worldwide condition right now that people are not satisfied with their governments and trying to push for better governance, which is a good thing. I think South Korea continues to stand out as a very dynamic economy, one that's very much driven by technology. And I think the future is very much in the area of technology, which South Korea excels in. But all in all, I think the outlook for the global economy is relatively sound, though, again, as you point out, there are going to be some issues in terms of government instability. But look, in the United States, we've also had our share of political issues, and yet the economy continues to perform very, very well. I think it's very important that when we read the headlines, we recognize that the headlines very often are about what happens with our government, what monetary and fiscal policies are doing, what trade policies are doing. Meanwhile, the rest of us are all working hard at trying to make things better for ourselves, our family, and our countries. I think that's a universal phenomenon, and some of us have more problems with our governments getting in the way of doing that. When I look at the U.S. economy, I always tell people I'm amazed by how well the U.S. economy does despite Washington. And it seems to me that South Korea may have the same situation where the country is doing well, will continue to do well, despite the political turmoil.
Okay, then are there any specific sectors in Korea that you believe have strong growth potential despite the current uncertainties?
Correct. Absolutely. And I think, again, I'm still optimistic that globalization will continue. It'll just to continue in a different form. And I think South Korea will benefit from ongoing global trade. I don't think we're going to shut that off. I think here in the United States, we have a new government coming in. We call it Trump 2.0 to distinguish it from Trump 1.0. It's the second term with a four-year break. And I know there's a lot of anxiety about the United States turning more protectionist with tariffs, and that certainly will be an issue in the next 6 to 12 months as the new president comes in and imposes tariffs. But I think there'll be a lot of negotiations going on, trying to make things better for all concerned. That at the end of the day, the incoming president wrote a book called The Art of the Deal, and he is a deal maker. And if the South Korea sits down with Washington, if Seoul sits down with Washington to discuss and negotiate trade relationships, I'm sure the outcome will be positive for both sides.
Okay, then you know how Korea is also known for our semiconductor industry or IT industry. Is any specific sector that you think that has very positive future?
Well, as you know, the AI revolution is here. A lot of excitement about the AI revolution. Some of it may be ahead of what can be delivered, but I think that for all practical purposes, AI is just a continuation of what I call the digital revolution. And the digital revolution started maybe in the 1950s when we had these large IBM mainframe computers. But the digital revolution is all about data processing, processing as much data as we possibly can, as fast as we can, as cheaply as we can. And I think, so from that point of view, artificial intelligence is it's an evolution of the digital revolution, if you will. And I think from the point of view of Korea, I think South Korea certainly has the know-how related to AI. But as we all know, Taiwan is the area of the world that really has the dominance in the ability to produce AI chips. And that's, of course, Taiwan Semiconductor produces AI chips for NVIDIA. But this is a very dynamic industry, and I think South Korea will rise to the challenge of this new technology.
Okay, thank you so much for sharing those insights on Korea. Then now let's shift to the US market, where optimism has been running high, but there are still some concerns about what's next. The
Yes.
US stock market continues to hit new highs these days, and many are still optimistic. However, you've mentioned the possibility of a market pullback early next year. Despite this, you maintain a very bullish target of 7,000 for S&P 500 by 2025 and 10,000 by 2030, right? Gives you this level of confidence in the market's long-term goal.
Well, I always try to have a balanced view of how things might unfold, and I have my base case, my most likely case, and then I try to present what might be some alternatives. And so my base case is what I've called the roaring 2020s. Obviously, it's meant to remind us of the roaring 1920s in the United States. The 1920s in the US started out with a lot of trouble. The World War II had come to an end a couple of years before. There was a Spanish flu globally. There was a recession in the United States in 1920. And so it must have been quite depressing looking at the future of the United States in 1920. Here in the 2020s, we started out with a pandemic in the United States and globally, and a lot of concerns about what that would do to our economy, the global economy. And yet, as you said, the stock market is at an all-time record high. Real GDP, the business activity in the U.S. is at an all-time record high. Consumer spending is at an all-time record high. And so in some ways, the roaring 2020s concept is already working out. And the idea is, the similarities are that there's lots of technologies available to increase productivity. And so the big story, I think, for the current decade, the 2020s, and by the way, there's no reason why it couldn't continue into the 2030s. I know the 1920s ended badly with a depression because of trade protectionism. So that is the big risk right now, is in fact trade protectionism. But as I said, I think we all have too much at stake in keeping the global economy growing and working. And so I don't think we're going to have that kind of situation. But I do think productivity is already showing signs of making a comeback. And productivity boosts economic activity. Productivity keeps inflation down. Productivity allows wages to rise faster than prices. Real wages can go up. And productivity is great for corporate profit margins. So it's there's nothing negative about productivity. It's all positive. And so I think that's what I'm looking at right now is in the first half of the decade. I think we've seen evidence of that. I think we'll see much more evidence of that in the second half of the decade of the 2020s. And that means that should be good for economic growth. It should allow us actually to have enough growth to help take some of the pressure off the deficit. I think the federal deficit as a fraction of nominal GDP, as a ratio of nominal GDP, will actually decline from currently 6% to 3%, which is what the administration is aiming to do. But put it all together, and I think you're going to see better earnings. And valuation, of course, is high. And that's one of the reasons that I think there will be a correction early next year. And a lot of people in the United States have very big gains in the stock market. And there's something called rebalancing where some of your portfolios become so large that you want to diversify to maybe other stocks that are cheaper. So a lot of people have huge gains in NVIDIA, in Tesla, and Microsoft, and they're not going to be getting rid of their positions. They're just going to be trimming their positions. And it makes more sense to do that at the beginning of next year than now for tax purposes. So I think that'll happen. I also think the Federal Reserve will make it clear that they are done lowering interest rates for a while. There's going to be a pause here. So I think that's another reason to expect some correction in the market early next year. But the underlying fundamentals, I think, will bring the market back up to a record high of 7,000 on the S&P 500 by the end of next year, 8,000 by the end of 2026. And as you said, 10,000 by the end of the decade.
That's a compelling outlook. Then how should investors should approach in this situation? And is there any specific sectors that we focus on?
Well, I've been recommending that global investors, when they look around the world, I've been recommending what I call stay home rather than go global. Of course, I'm making that recommendation here from the United States.
Yeah.
And so what I meant by that is overweight the United States relative to the rest of the world. And we've been saying that since 2010, and it's worked out very, very well, and it continues to work. I would certainly make sure that in a portfolio held by a South Korean investor, that you do have exposure to the United States, and you can do that obviously with a S&P 500. You can do it with a QQQ, a NASDAQ ETF. So it's very easy to do that these days. If you've got a lot of time and you can really study stocks, you can obviously come up with specific names. But I think foreign investors looking at the United States should have some exposure, if not a lot of exposure, to the United States. Then I think you have to look at your own domestic stock market. And again, I think the technology boom is a global boom. The digital revolution is a digital revolution around the world. Artificial intelligence is not limited to the United States, clearly. And so I think that's where the opportunities are still compelling. That's not that stocks are cheap, but I think the potential for earnings in technology is still quite strong. I think that financials, generally speaking, should do quite well over the rest of the decade. Financials in the United States, financials in places like South Korea, India. As our countries get wealthier, that wealth needs to be managed, and managing wealth clearly is a very good business. In addition, I'm not that familiar with what happens with corporate finance, with mergers and acquisitions in South Korea. But in the United States, we do get a lot of mergers and acquisitions, takeovers, when the technology sector is doing well. And that could be a source of excitement about the potential for that kind of consolidation, those kind of mergers and acquisitions to create faster adoption of the technologies up ahead here. I think we have to consider that the future is here. We're about to go into 2025, and I've been doing this for almost 50 years, and I think we've all been around at least since the 2000s. So from 2000 to 2025 is 25 years. And in 2000, the future was 2025. And I think a lot of it has turned out to be remarkable in that technology has delivered a lot of what we only thought would be science fiction. And of course, one of the wizards in all this has been Elon Musk, in terms of his ability to create science fiction into science facts, as we've seen with SpaceX, as we've seen with Tesla or with Neuralink. And so I think Elon Musk is sort of like a great inventor that's encouraging everybody to become more inventive, more productive, with more innovation.
Yeah.
So I think we're going to see that the pace of technology and its impact on our lives is going to increase with robotics, automation, humanoids, artificial intelligence, and this is no longer the future. This is no longer a forecast. We're in it. We're starting to see that it's really having an impact on the way we live.
Yeah, then if those tech companies continue to perform well next year, then many Korean investors will likely remain focused on those major names like Tesla, Nvidia, Apple, and Microsoft. Then
Yeah.
how can they strike a balance between these big players and other investment opportunities to build a more well-rounded portfolio?
Yeah, well, that's why I suggested instead of trying to buy Nvidia and Tesla here, I mean, Tesla's been on fire ever since President Trump got elected. Obviously, Elon Musk is very close to him, and the stock has been going straight up. Whenever I see something like that, I worry that at some point it might go straight down. I don't know what would make Tesla do that, but there's a lot of people just buying without thinking about the underlying fundamentals. So instead of at this point buying stocks like Nvidia and like Tesla, I have no problems with doing that. But I think to your point, you do want to diversify. You don't want to get into a bubble mentality where you're chasing stocks up along with everybody else, because that can obviously create a melt up that leads to a meltdown. But I have no problems with diversifying with a QQQ, which is a way to own the NASDAQ 100. I have no problems with the S&P 500. With the S&P 500, you get the Magnificent Seven. The Magnificent Seven currently account for 30% of the market capitalization of the S&P 500. And but they're expensive. They have a forward PE of 30. But if you buy the S&P 500, you're also getting the S&P 493. And I think there's a lot of opportunities there. Look, when you look at your portfolio, I think increasingly you have to ask yourself about every stock you own, is it a technology stock? In other words, do they either make technology, hardware and software, or do they use technology to increase their productivity, to improve their relationships with their customers and their vendors? At the end of the day, technology is a very, very powerful tool for increasing efficiency, for increasing profits. And so I think we're in that kind of environment.
That's a very practical approach for investors here in Korea. Thank you so much. Then let's move on to the topic that's been on everyone's mind, inflation, interest rate, and what the Fed might do next. You've said before that no matter who wins the US election, inflation could rise. Do you still see a possibility of rate hikes next year?
Well, I think it's possible. It's not my most likely scenario. As you know, the Federal Reserve started to lower the federal funds rate. It's the central bank rate that the Fed charges banks. It's a key rate. I think there's still a chance that they might decide to pause. The reality is the economy is doing very well. The unemployment rate is very low, near 4%. We are basically at full employment. We have labor shortages. We also see that inflation has moderated, but it's still not quite at 2%. And there's some areas of inflation that remain stuck and sticky, something more like 3%, maybe even 4%. But overall, inflation has moderated significantly. But Fed officials think that the federal funds rate is still too high. It's still restrictive. And I'm looking at the economy and said that doesn't really make much sense, because the economy is doing well, inflation's come down. There's absolutely no rush to lower the federal funds rate. And I've been saying this since before September 18th, since before they started lowering rates. And finally, Fed Chair Jerome Powell, about a week and a half, 2 weeks ago, said the same thing. He said, the economy is doing well. Maybe we shouldn't rush to lower interest rates. So I think interest rates are basically where they should be. I think the economy is growing at around 3%, and about 2 percentage points of that is productivity. The more that the growth of the economy is based on productivity, on efficiency, the more resilient it is, the stronger it is, the greater is the likelihood that interest rates are where they should be. They don't have to be lowered if the economy is performing just fine. And by the way, the bond market agrees with me. The Federal Reserve, since September 18th, has lowered the federal funds rate by 75 basis points. And meanwhile, the bond yield has gone up about 75 basis points. So I think the bond market agrees with me that the Fed may be stimulating an economy that's actually quite strong and isn't really necessary. But look, this is not a terrible problem to have. If the Fed lowers interest rates again, that increases the chances of a melt-up in the stock market. And when everybody thinks about a melt-up, they think about 1999 and 2000. It doesn't have to be an exact copy of what happened back then. It could be a correction, and that's what we're looking for, a correction, maybe 10, maybe 15%, sometime early next year. And then I think that'll be a buying opportunity rather than a reason to get out. But as you said, there's going to be a lot of confusion over the next few months with the administration coming in and with a lot of plans, and how they get those plans through Congress will be interesting, and what the final impact will be interesting. And of course, meanwhile, I think the president will find it easiest to move forward with tariffs, and that could also create some nervousness in the stock market.
Now, speaking of interest rate, many Korean investors have been buying U.S. long-term bond ETF since last year. So if interest rate cuts slow down next year, what advice would you give them?
I have no problems with owning U.S. Treasury bonds, and it doesn't have to be 10-year bonds or 20-year bonds. It could be something more intermediate. It is a good return. I think getting 4% on U.S. Treasuries is a very good return. But I think it's going to be a rate that maybe somewhat, there might be some volatility in that, and so could be some ups and downs in a ETF based on bonds. But overall, I don't think there's going to be. I think there's going to be volatility, but I think overall it's going to be a sideways action going into next year.
Oh, thank you for that clear advice. And before we wrap up today's interview, I heard you've been showing a lot of interest in Korean market. Do you have any plans to expand your business here in the near future?
Well, absolutely. We're working on. There's more AI software these days to translate our research into other languages, and we're certainly looking to target South Korea. There's a lot of very smart investors there, and I know there's a lot more interest in what's going on in the U.S. So hopefully we can help South Korean investors understand the U.S. market better. For those who can read English, you can certainly use Google to translate our research for individuals, which I think is affordable, and it's practical, and it's very action-oriented, market-oriented.
Cool. Thank you so much for sharing your time and your expertise with us today. We hope to see you soon on our show again. Thank you for your time
Absolutely.
today.
Thank you. Bye-bye.
야데니 대표님과 함께 내년도 미국 주식시장 전반에 대한 이야기 함께 검토를 해봤습니다. 기회가 된다면 또 직접 모시고 보다 자세한 이야기 이어가 보도록 하겠습니다.